Hello and welcome to CMC Markets presentation on what does the year of the snake mean for global markets. My name is Colin Szynski, Senior Market Analyst. Chinese New Year is coming on Sunday, February the 10th this year. It's bringing to a close a year of the dragon and kicking off a year of the snake. The Year of the Dragon that just ended was particularly strong for stock markets, with many markets around the world posting more than a 10% gain. Performance in previous years of the snake, however, as we start to look forward, suggests a mixed outlook for world markets. Past snake years have been very difficult for the Hang Seng and commodity markets. However, they've generally been positive for the UK and Australian markets. US market performance during recent years of the snake has been mixed, and for the last 60 years it's actually been alternating back and forth between positive years and negative years. The last year of the snake was in 2001 to 2002. This was a particularly negative year. It was the middle year of a bear market, and it included the reaction to the 9/11 attacks. So it was a particularly poor year and seems to have distorted some of the results for snake years in general. Looking at this slide here shows the average performance of various markets around the world during different years in the 12-year Chinese calendar cycle. So looking here at the year of the snake has generally been on average negative for the S&P 500, the Hang Seng, and commodities. However, it has generally been positive on average for the UK market and Australian markets. We note here also at the bottom that the year just concluded, the 2013 Dragon that ended recently, has shown a very, very strong results with 14% gain for the S&P 500, 16% gain for the Hang Seng, a 3% decline for commodities, but also 10% plus returns for both the FTSE and the Australian market. This next table here shows how markets performed in various snake years. So we look back at the different cycles, and we're using a year end of January the 31st to approximate the turn of the year on the lunar calendar. Looking at the S&P 500, we can see that we alternated between negative and positive returns since 1954, and the last year of the snake was negative year. For the Hang Seng, the 4 snake years since 1966 have all been negative. For commodities, there was a positive year in 1966, but the last 3 snake years have had negative returns. The FTSE and the had all positive returns except for the last one in 2001-2002, likely affected by the global bear market at the time. The Australian market actually had a positive year last time in 2002, and 3 of the 4 last snake years for the Aussie market have been positive. We'll now look at what kind of momentum we have in the markets as we move into the snake year. Coming out of the year of the dragon, the last few months have been very, very positive, and stock markets and commodity markets have really been on a roll. This is due to a number of factors. First of all, improving economies in both the United States and in China. As global economic momentum has improved, the outlook for corporate earnings has started to improve, the outlook for demand for commodities has started to improve, and markets have responded accordingly. Also, we have increased liquidity in the financial system from QE programs. We've had increasing QE from Japan with the promise of more to come next year, as in 2014. Also, we've had 2 recent increases to quantitative easing in the United States, where they raised it in both September and December of 2012. As all this new money comes and starts working its way into the financial system, it often finds its way into stocks and commodities first, rather than being deployed. It takes longer for it to be deployed into the banking system and onto Main Street. Also, we've seen reduced political risk over the last year or so. There's been progress made in Europe. There's been some progress made in the United States towards dealing with their fiscal problems as well. As the fears that politicians don't understand the problem, or we're going to let it accidentally spiral out of control, as those risks start to decrease, we're seeing capital that had been tied up in very defensive positions in U.S. Treasuries and precious metals starting to work its way back out into other markets such as stocks and commodities. There is a risk, however, to stock markets, perhaps as we approach the end of the year of the snake, or possibly it could slip into the next year, which is the year of the horse. And the reason for this is that at some point, these open-ended QE programs will come to some sort of an end. Whether they just stop increasing it or actually start taking money back is hard to say at this point, but at some point they're likely to end, and when they do, there's a high risk of a correction in global stock and commodity markets. And the reason for that is that, as I've noted, fast money tends to find its way into the stock markets first, and because of this, over the longer term, it's been shown that QE has artificially inflated stock and commodity prices. Following the end of both the QE1 program and the QE2 program, we had a 10% plus correction in global markets after those programs ended. Now, at this point in time, the general feeling at this point, which is at the beginning of February 2013, is that the Fed may let it run for about another year, through most of 2013, perhaps into the first quarter of 2014. There's a new Fed chairman likely to take over in January of 2014, so it remains to be seen, will they finish it just before the Chairman Bernanke's term ends, or if they'll leave it for the next chairman. At this point in time, Chairman Bernanke is not expected to continue past the end of his current term. So because of this, you may see a correction possibly towards the end of 2013, or a correction could slip into 2014, depending on when the Fed actually decides to start to curtail QE. So as noted, it could be in the year of the snake, it could be in the year of the horse. And that concludes our presentation and outlook for the upcoming year of the snake. We invite you to check out other market analysis related videos in our series. Thank you and have a great day.